Saturday, June 2nd, 2018, Monaco 64, home of alternative economics and contrarian views. This morning I'm going to look at something different. I've done this in the past quite a bit, but with all the new subscribers I'm getting, some of them are asking about technical analysis. And as many of you know, I worked as a futures and options broker or salesperson in the city for many years. And I always was into technical analysis, was one of my strong points, even though I covered fundamentals, geopolitics, affecting markets and everything. It's good to step back sometimes and look at the charts. So I'll be looking at the gold chart, silver, the dollar index, the Dow, Bitcoin, the British pound, also British pound versus gold, Canadian dollar versus gold, and the Aussie dollar as well, and versus gold. I'd like to say that tomorrow as well, on Sunday, I'll be doing a live stream around 4 p.m. London. That will be around 11 a.m. New York time or Eastern Daylight Time. And that will be around 8 a.m. in the West Coast. I need to do it at that time. I'm trying to do it as late as possible for everyone in the States. And also the subject, maybe you can, tell me in the comments below of this video, what are you looking, what you would like maybe to talk about. Or if not, I will think of something definitely for the live stream. I will do Q&A as well, all your questions about subjects that we cover here. So let's start then with gold. And I want to bring a long-term chart of gold, a chart that I've looked at in the past. And it's a monthly chart actually. And this chart is from barchart.com, just to let you know. And it's going back quite a few years, almost 20 years. It is 20 years actually, a 20-year chart. And I've done a retracement or Fibonacci analysis of the whole move from just under 255 around 254 to the high of 1920 in 2011. And what you get here is the retracement, the 50% retracement you can see is at 10,087. We went down to 1,046, of course, in the end of 2015, which breached the 50%, but it recovered right away above that level. And as you can see now, we're basically trading below, we've been below and above that 38.2% retracement, which is the golden mean, the Fibonacci golden mean, together with the 61.8, which is the mirror of that 38.2. I guess if we had gone to the 61.8, we would have dropped below 1,000 because it's 891. Not a great close yesterday for gold. Typical, I guess. Non-farm payroll came out and gold was hit hard, went back up, and then towards the end of the day, when liquidity was low, they chopped, not slammed it down, but ticked it down throughout the day or afternoon. So as you can see, in May, the low was 1282. So we just touched that 38.2% retracement. It's quite amazing how it held there, even though I also have 1302 as a support. And then yesterday was the first day of the month, of course, so that little bar is very small. So the high for bar chart is 1300, which it was yesterday, around 1350. And the low they've got is 1291. I had 1288 in my system, but so that's where we are right now. So that 1280, 84 area is still going to be important support. Above the high of the recent high this week has been around 1306, 07. That's been where the bullion banks and the powers that be have capped gold. But the high from last month is 1326. So that's gold longer term. Silver did the same kind of chart, and silver is directionless, I guess. The range has been really narrow since the beginning of last year. Very narrow range. It's amazing that we've had such a narrow range for almost, 18 months. Basically between, let's say, 1550 and I would say 18 or 1850. So very narrow range. We haven't really breached any important levels. Looks like the last few months the support has been just above 16, so it's holding 16. We haven't traded below 16 this year so far, so that's silver. So dollar index, which is an important one that people look at. I've done a weekly analysis here, 5 years, and I've taken the low in May 2014, and we got below 80. That's when I think we also had Abenomics being, how can I say, announced a year or so earlier, and the dollar started rallying against the yen, against other currencies. From that low, we went to the high in the beginning of last year at 103.80, 82.83. So I've done the Fibonacci again. Look how we touched the 61.8. Some people still, nature and markets are quite related in my opinion, and that's why the Fibonacci golden mean is so amazing to look at. Look at where we touched, the low in the dollar recently, where it's been. It's let's see, 12th of February. The low was 88.25. Look where the Fibonacci retracement is, the 61.8 of the move we've had for the last 4 years. It's 61.8, and we consolidated for a while, and then the dollar rallied and it broke through fairly quickly through the 50%, and now it's really testing the 38.2%, which is 94.30. We closed at 94.15. And it seems to maybe also be forming a double top, or it could break through. That's the high, let's see, from November 2017. It was 95.14. So that's the key level for the dollar index. Is it a double top? Are we going to fail to stay above the 38.2 retracement from the drop that we've had? It's questionable. We need to keep an eye on it. The Dow, this is an interesting one, of course, and it's a 1 year daily chart, and I brought the moving averages as well. The green line is the 200 day, the orange is the 100, and the black is the 50 day moving average. And you can see that in a bull market, you usually got the 200, the lowest one, you got the 100, the second lowest one, and then the 50 day is above both. There's good momentum. We kind of broken that trend, because the 50 day has been below the 100 day since the beginning of April or thereabouts, and we're still holding that 200 day moving average. You can see that previous dips there, even the low of this year was just below that. And I've done a retracement as well from the high earlier this year, that was on the 26th of January at 26,616, and the low on the 2nd of April, which was 23,344. And again, this time is the 50% that's been holding quite well. Recently, we tried to get back above the 50%, which is just below 25,000. It's 24,982, and it failed. It tried twice there, as you can see, and it failed. The 38.2, that's pretty much where we are right now in terms of where the market is. We closed the week at 24,635, and the 38.2 is 24,595. So that's the Dow. I personally think the top in January, 26th of January, is the top for the time being, for a long time to come. Some interesting charts for Bitcoin. The first one I'll look at is a weekly logarithmic chart, and I found some really interesting curves. It's like a French curve. It's a parabola the other way here, and look how this is quite amazing that we found resistance here around these levels. I've got a trend line coming from 2015 from the low there. What was that low? Let's see. The low was at $150. And so it is possible, unless we break out here in Bitcoin to the upside, and we'll look at some more shorter term charts, that we could go down further. I mean, it would be the point where the Bitcoin price would meet that trend line right now. Well, let's say in a few weeks time or a couple of months time, it would be just above 4,000. So it is possible it could go down, but Bitcoin would still be in an uptrend on this logarithmic chart. So let's look at some more charts. Bitcoin, this one is a daily one, and this is more interesting, you see, and it can tell that from that logarithmic chart how big the resistance is, and this one shows you even more. But interesting that we broke the first trend line that's coming from the all-time high there, and we rallied, and then we failed again at the 200. That's the 200-day moving average, by the way, there. So the purple line, and look how let's see, since March, well, roughly in the end of March, we try to break that 200-day moving average. That was at just above 9,000. We failed. And then in April again, we tried to break that. That was 9,800, the 200-day there, and we failed. And then finally, right on that new trend line I drew there, in the beginning of May, we try to break through 10,000, but that happened to be also the 200-day moving average. So I would say now that 8,000 is a key level, and then just above 10,000. If we really need to get back above 10,000, and that would also mean that this chart would have held, you know, the French curve chart. That would mean that we wouldn't probably go back and retest 3,500 or 4,000 in Bitcoin. A British pound, for all my UK viewers, I've done a weekly chart going back 5 years. The high was in 2014, and that high was even before Brexit or the referendum was announced. The pound topped almost at 172. Don't forget, it had topped at 211 just before the 08 crisis. During the crisis, it dropped to like 135, and then it had rebounded to 172 here. And then we've dropped all the way. Brexit helped a bit. I personally think the policy is covert debasement or devaluation, with Brexit as an excuse or a scapegoat. So we bottomed there. There was that flash crash in October 2016. Then we rebounded, and we got almost up to the 50% retracement of 144.50 there. The high was just below 144. So again, these Fibonacci levels are not a bad indicator and tool. And we've broken completely down now, and we went through the 38.2% retracement, and the pound doesn't look good. I guess the next support will be 130. We saw some resistance there in May of 2017 before, yeah. So, and it's a round number as well, so 130 level. But I think medium to longer term, the pound looks to be going lower. So the pound against gold, again this week it was closed on the weak side yesterday, disappointing. But it's, as you can see, it's starting to pick up and done the retracement again. That was the high in 2011, just below 1200 was 1194. And then the low here was July 2015 at around 693. And again, the other thing about retracements is that a lot of times markets consolidate between the 50% and the 61.8%. And that seems to be the case here for XAU GBP. I know it's been above and below there, but for the last couple of years, mostly between that 950 and 1000. Canadian dollar. So that's USD CAD. That's $1. To the Canadian dollar. To me, it looks like, yeah, the US dollar looks fairly good. It just looks like a teacup and handle bottom for the US dollar versus the Canadian dollar. So not looking great for the Canadian dollar. It looks like 130 as well as a key level here. It's like a little flag or the handle of the cup. If we break above that level, we could see continued weakness in the Canadian dollar. And I think looking at XAU CAD, gold should continue to protect Canadians. They don't have to hold US dollar, they can hold gold. And I think it will protect them even more, because I expect gold to continue to do well, even in US dollars, even if the dollar goes up. So that's a pretty good looking chart. Since 2014, really, or middle of 2013, we've seen higher lows and higher highs in XAU CAD. To finish off, last but not least, Aussie dollar, looking very similar to the Canadian dollar. Teacup and handle here, and it looks like we've broken up already, but it's not definite. We could stay in the range here, but Canadian dollar also looking a little bit on the weak side against the dollar, and gold as well has protected people in Australia from debasement of their currency. I mean, we're not back to the old high around 1850, but very near there, and we are, like with the Canadian dollar, making higher lows and higher highs. So that's the technical analysis. I hope you enjoyed it. If you did, please like, share it, subscribe to my channel if you haven't yet. You can also follow me on Steemit, DTube, and on Twitter. Enjoy the rest of your weekend, and I'll talk to you later. Take care. Bye.